Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Hope you're all having a great day. Really very busy session. Well, maybe not from like an overall perspective, right? Averages aren't really going anywhere, but a lot of stocks flying around. For us, a lot of names in the news today that we have positions on or trades on. So kind of a particularly busy day for us. Us at Options in Play, right? Um, this morning, a handful of bios news, right? So we had to manage those. And actually, of the earnings this week, to me, like two of the most interesting ones reported last night. Okay, so I've been kind of holding off on earnings this week. Um, not because I didn't think things could move, like I did, but the problem was that a lot of the earnings this week were software stocks, and I'm still not like really loving the action overall in that sector, like earnings wise. Swing trading wise, different story. Earnings wise, it's been a little bit tougher. They haven't really had those big moves. The volatility hasn't really been too elevated. So I've been kind of more selective, holding off a bit more. And this week, even though we had a pretty busy lineup of earnings, a lot of them were those software names. So that's why, if you've been noticing, I haven't really done a whole lot of earnings this week. It's because of that reason. So last night, two of the more interesting setups. One was a software name, so Work, which I'll get to in a second, and the other one was Restoration Hardware, so obviously a retail name. And both, right? Both we were looking at Strangles because both seemed to have like setups that indicated they could have pretty big moves, or at least more than what the option market was anticipating. Restoration Hardware, yes, it had had a large run into numbers. Yes, the options were pricing in a big move, like 20, 22, 23, depending on what point of the day you got involved. Um, but at the same time, it has a history of big moves, right? Here, going back basically over the last year and a half. A history of big moves, a history of beating or missing guidance very substantially. And to top it off, about 40, maybe a little bit more percent short interest. So high short interest, explosive moves, a history of explosive moves. And it just seemed like, yes, the options were expensive, but it also, like, there was a potential for even bigger move. And what happened was it was kind of in line. Um, Guidance specifically wasn't anything special, basically in line, and that kind of led to like a more muted reaction off the open. Didn't really have that big of a gap, and with like the options, the strangle that were about 25 points to 30 points out of the money in either way. And when you get like a flat open, that's not an ideal scenario, right? Because you're looking for a big move, and when it opens flat, it's not a good it's not a good recipe for like that strategy. So this one has continued to build throughout the day, right? And oops, go. So here you can see. So it's continued to build, push. So the way I like to manage these strangles when they don't have like a massive move like right off the open is I at least want to wait for on the actual session that the news came out to at least be able to recover the majority of the net debit. So like 90-95% plus of the net debit. Okay. Then I could think about either closing it out or rolling. Like that's kind of my 1 day rule. Is like I want 90, ideally more than 90%. So if it's like 90%, 95%, even like marginal gain. So even like maybe like a small gain, like a 5% or a 10% gain, right? Like that's kind of like my threshold where I will manage the straddle or the strangle on the first day, right? Unless it's like up significantly, like that's a completely different story. So it took several hours, but Restoration Hardware finally got to that threshold where the position was actually up, like from like a net debit perspective. So we were able to roll. So that's why, if you're wondering why I waited, it's typically if it takes this long to get that type of moves and to get like the net debit back, then I'm a little bit more in like risk off mentality. Okay, now work. A little bit different. So I thought this one was like a nice setup because yes, software stocks haven't been particularly volatile, but this one was also a really interesting technical pattern, right? Kind of like a tightening pennant. You can see I have the lines on here, and it went into earnings basically right at the top of the yearly downtrend resistance, right? So options were looking for 3, and to indicate, like the chart seemed to indicate, if it broke out, could be room up to like 26, 27, which is about 4 and change higher. And then if it broke down, you're probably looking at like a new low. So you're probably looking at about 4 points lower as well. So options are priced in threes. Chart seemed to indicate 4 to 5. So I thought it was like a decent setup, right? Last night's numbers, decent. Guidance just only in line though, and that it doesn't seem to be enough to really create the big move necessary for the stock. You can see it kind of spun around. So if I go to like 30-minute, you can see it spun around. It dipped and it rallied, but it never really sustained like a very big move. It really never moved more than like $1 either direction. So it's priced in three. It never really went more than $1 either way. Neither the bear portion of the strangle or the bull portion of the strangle moved high enough to recoup the 90-95% of the net debit, like that threshold that I was just talking about. So that's why for this one, kind of need to sit. So there's 2 more weeks. So the options go out through main December expiration, so December 20th. And now it's going to enter like that window, what I call like the 2 to 3 day rule. So stocks that don't move initially to reward like the straddle, the strangle, then the plan is to give them 2 to 3 days, see if they develop any momentum in either way. So for work right now, it seems to be a better bullish setup just because of where it's sitting right now on the chart. So I'd be looking for maybe a continuation, like a breakout of this pennant and a push up into like the mid-20s. So I give it 2 to 3 days. If no sustained move or no sustained direction materializes after 2 to 3 days, then that's the point where I start to focus more on like salvage or premium recovery. So, taking what the options have remaining versus like, trying to hold off and wait for a move. Then after 2 to 3 days, if no move is materialized, then it's more of just like, trying to like, salvage maybe like 30, 40, 50% of the net debit versus like trying to hold for like the actual like 100% of the net debit or even like a profit. Okay. So like I said, these two probably like my two favorite setups of the week, and even then you can see like it almost feels like everybody's focused on bios and people aren't really focused on earnings this week. It's like all the attention is on bios and people aren't really like trading like the retail and the software reports. But maybe that'll change. You got another big lineup, another busy night of earnings tonight, so could change tonight. We'll see. But I just wanted to like talk through the rationale of that, how I go about handling like those ones that maybe don't get that huge move right away. I mean, it would have been fantastic if it worked and Restoration and Hardware both opened up or down a ton, but it doesn't always work out the way you want, right? So a lot of times like trading is about managing. It's about managing the winners, but it's also about managing the losers too, right? So in this case, both of these didn't work out initially, so it comes down more to like trade management. All right. So if you have any questions, please don't hesitate to reach out. If you like these videos and you're looking for more information on options trading or options education or maybe trade ideas, follow up with the link in the description of the video for more information on options at play. Have a fantastic night, and I will talk to you guys tomorrow.